Good morning and welcome back, listeners, to the Haven Financial Group radio show. I'm Larry Colvig, founder and CEO of the Haven Financial Group. On with Glenn Ramey, our insurance specialist at the office here, talking about all the different types of insurance, healthcare, really major expenses. We're going to focus on long-term care, Kim, in this session, in this segment. So again, if you have questions, 612-504-8400 or havenfinancialgroup.com. Check out all the classes. We're really on it again this year. We've had full classes, 2 estate planning classes this past week, which were full. Again, all these retirement puzzle pieces, trying to simplify them to the best of our ability.
Absolutely. And there's a lot of information here, folks, and we understand that. And Larry understands that as well. We're just sort of scraping the surface. But again, as Larry mentioned, if you have questions about this, these educational seminars, you can find out more at havenfinancialgroup.com, or you can call 612-504-8400. Okay, Glenn, let's talk a little bit about long-term care. This is a very frightening thing for a lot of people, because the first thing you think of is high expense.
Yeah, no question about it. Long-term care costs are not insignificant. I'll just use my state's median cost as an example, right? So the state of Minnesota will tell us that the median cost of full-time, not 24-hour a day, just 40 hours a week home health care is currently almost $70,000. To stay in an assisted living facility full-time is $60,000 a year. And to be in a nursing home today, median cost is $120,000 per year. And that's just as of today.
Mm-hmm. Absolutely. Are there ways to, what kind of insurance can you buy? What can you do to acquire this kind of help and not necessarily be responsible for those kinds of bills?
Yeah, so if I can be brief here, because there's a lot to that, that question that you have there, right? I don't want to overload the audience today. So simply say this. Number one, you should have a plan. Whether that plan includes insurance or not is beside the point. You should have a plan. There's a 70% likelihood we are going to need some form of help before we've passed away. Do we want that to be from our spouse or family members, or do we want to pay for that care for someone else? There's a 50% chance we're going to spend time in a nursing home, right? Are we preparing and planning for that? Now, there's traditional long-term care insurance, the first products that were reduced to try to help this cost. And as the market expanded, now there's life insurance with riders. There's hybrids that are life insurance and long-term care plans combined together. And there are asset-based long-term care options that are simply re-leveraging savings for long-term care events. So many different options, pros and cons between all of them, but any one of those could be a fit for your scenario and trying to protect yourselves from these costs.
Absolutely. And of course, these are all discussions that can be had with the experts here at Haven Financial. And no doubt, they change, Glenn, depending on what your situation is, right?
Yeah, so don't forget that these are an underwritten product. And for people who don't know what I mean by underwritten, right? Health reviewed. You have to qualify for these plans. We can't wait till the diagnosis happens and then buy these insurance policies. Sure. So again, this has to be planned in advance. The industry will say plan in your 50s because your health might not have changed by now, but realistically, most clients, and it's okay to plan in your 60s for this event.
Sure. One of the things that Larry, I know, says frequently, and I feel confident, Glenn, you will agree with this. If your long-term health care is a plan that you'll live with your kids, think again.
Yeah, or at least I hope you've had the conversation with them, right? Do they know that they're part of that plan, right? It is a family decision almost, because all family members can be affected by this, right? Sure. Do we want to have mom or dad live with us while they're in their retirement years so that we can be caregivers? Or do we want to try to plan so that isn't the event that we have to deal with in those circumstances? Yeah. Absolutely.
Absolutely. All right, let's change gears just a little bit here and talk a little bit about life insurance. So you just mentioned this, Glenn. You know, life insurance has changed, and there are all kinds of different riders and that can benefit your life while living, and not just after you've passed away.
Absolutely. Absolutely. So I usually try to break down life insurance for my clients in the following way, right? We have term insurance, right? Renting insurance for a specific period of time. Great for our working years, great for debt liabilities to cover a debt that's finite. We need it for this long, for this protection. term is a cheap way to be able to protect ourselves against that. Now we talk about other reasons people carry life insurance into retirement, whether that's part of their final expense planning, right? Funeral costs being paid for through life insurance, whether this is related to income replacement, loss of that first Social Security check when the first of us passes away. Maybe this is part of legacy planning. We want to gift upon our death. And what's one of the most tax beneficial ways to gift? Well, that's life insurance, because the death benefit's 100% tax free, right? Or it might be part of a tax situation we have because we save so well for retirement. We have estate taxes that we have to worry about, right? Life insurance is the vehicle to protect against those. And we can use either whole life policies with very fixed parameters, fixed cost, fixed benefits, fixed interest rate return on our cash values, or universal life policies that are more flexible with flexible premiums, flexible death benefits. And also all of these more permanent options can come with those riders connected to things like our previous topic, long-term care.
How important, there's a lot of people who don't believe in life insurance.
Yeah.
Go ahead. How important do you see it as being?
Well, when I sit down with a client for the first time, you're going to hear the same question from me every time with those clients, which is, if we're having life insurance, what's the goal, right? This is a tool, a financial product meant to solve a problem for us that happens upon our death, right? Whether that be the debt or the income or any of those other topics I mentioned, right? So I always say, what is the problem you're trying to solve here? And what tools can we use to solve that problem? And life insurance might be one of those tools available to us.
Life insurance also, of course, is based on your health in most cases. And so that is something that I'm sure that you suggest people address pretty early.
Exactly. Another underwritten product, right? Another thing that our health is a factor for. Now, I know a few of you might have seen some commercials out there before for no health question applications for life insurance policies. These are going to be very modest, small life insurance policies with typically high premiums for the amount of benefit that you get. So if you want a good deal on your life insurance, right, being in better health is always going to be the better scenario.
Sure, absolutely. So give us a sense of what life insurance, if you followed the good scenario and you're in good health and you're looking to buy some insurance that maybe is going to replace an income or is going to take care of debt. What are we talking about?
Well, so I say two vehicles to use, as I mentioned earlier. In those circumstances, we need permanent life insurance. Term won't solve the problem because term doesn't guarantee the insurance is going to be with us at the time of our passing, depending on how long we live. So whole life and universal life are two of those vehicles that are more permanent in that regard. And I mentioned earlier, whole life is a very fixed product, very fixed parameters as far as your premiums, interest rates, and death benefits are concerned. Universal life comes in three different categories: guaranteed, index, and variable. And I just want to touch very quickly between the index and the variable, right? We often see clients coming in with old life insurance policies that we review to make sure they're in solid, established footing, right? And the policies that often have the most problems in retirement years are going to be the variable ones, because that variable is a term used to describe what your cash value is. Is it variable? Can it go up or down based on markets, right? And a variable policy is unprotected from market adjustments. So I like to say to a client, do we want to risk our life insurance having a bad market year? We watch the cash value deplete by 30%. What is that going to do to the longevity of that insurance policy when that happens? Other products like index universal life insurance policies have mechanisms that insulate us from those negative market years while still trying to capture the upsides when those market years are good.
Kim, if I may add, because that's a lot of information and a lot of good information. And I know listeners might be saying, oh, they're trying to sell us life insurance. Just listen. No, don't get life insurance if you don't need life insurance. But what I know is, and Glenn and I both, because we see it on a weekly basis, is a lot of the listeners, you have life insurance. You've had it for a long period of time. You maybe did it for a reason back 20, 30 years ago, and you haven't looked at it or revisited it. We encourage life insurance reviews to make sure that it's not going to eat itself up. It's going to do what you wanted it to do when originally you got it. Glenn and I see it all the time. If you don't need life insurance, don't pursue any life insurance, but make sure you maximize what you already have. Maybe that's a final expense policy. Maybe it's a replacement of a spouse's income. Or for listeners that have a lot of qualified IRA money, and the rules changed a few years ago for legacy planning with stretch IRAs. We have a lot of higher net worth people, and you don't even need to be high net worth, where life insurance retirement plans are a great means of legacy planning. And many people have never even explored. Many of the listeners probably never even heard of that. LIRPs, life insurance retirement plans. So explore the options. How does it factor into your long-term planning? Get a life insurance review. Make sure you're not paying way too much for insurance. The cost of insurance, a lot of people are.
Yeah.
Don't you deserve to find that out? And over time, maybe you've just been paying way too much. So understand the options that are out there. Develop the confidence. We'll take you through and we'll simplify the process. What may seem like a very complicated one, but I'll tell you this. Glenn and Isabella are very strong, and there's no cost to do that.
All right. The number is 612-504-8400 if you have questions about life insurance, if you have questions about retirement planning. Haven Financial Group would love to sit down with you, a no-cost meeting to discuss what it is you're thinking about, what you'd like to do and accomplish in retirement. Again, that number 612-504-8400. Glenn Ramey is with us. He is the insurance expert, one of them there at Haven Financial Group. And we've got more discussion about insurance coming your way. Coming up next, we're going to talk about annuities and are they the right thing for you? You're listening to the Haven Financial Group radio show.